Welcome back. Well, we'll begin this segment with the U.S. market. Sell in May and go away is a popular Wall Street adage that refers to selling stocks in May and not buying again until November. Jill Maladrino, VOA Channels TV business correspondent in New York, is joined by Jared Dillian, author of All the Evil of This World, to discuss if the seasonal trading has any merit.
Sell in May and go away is a well-known trading adage that warns investors to sell their stock holdings in May to avoid a seasonal decline in stocks, but get back in the market in November. Jared, is there any validity to this, and would you recommend investors take money off the table?
I really, I've had no faith in sort of seasonality or farmer's almanac type of trades that I've heard about over the years. I've been trading for 17 years, and there is the only trade that I've seen work consistently year after year is the market does tend to go up during the Christmas and Thanksgiving holidays. But I think that, last year was a good year to sell in May and go away, but it seems to be pretty random as to when that works and when it doesn't.
Well, it kind of makes sense because volume is clearly going to drop off in the summers. Trading desks are really thin, so I almost think the seasonality lends to the adage itself.
Yeah, but it's going through my trading career, it's worked some years, it worked hasn't. I think people sort of lay claim more to it on the years that it does work. And actually, from my standpoint, the people I talk to, I think anecdotally speaking, the market has rallied so much off the lows and people are so underinvested. I think people are getting stopped in at this point, not stopped out, but stopped in. Every time the market goes up, people are forced to buy just to stay invested. And I think that's the dynamic that's going to happen over the summer. I think we'll actually rally. What sectors are you looking at if you're forced to put some money to work at this point? Definitely materials. Materials has rallied a lot. But in talk about being underinvested, global asset managers, around the world are totally underinvested materials because it hasn't worked for 5 years.
Okay. Thank you very much, Jared. For Channels TV in New York, I'm Jill Malandrino.
And South African President Jacob Zuma led a high-level business delegation on a state visit to meet Iranian President Hassan Rouhani in Tehran on Sunday for the signing of 8 agreements between the two countries. Zuma was welcomed by Rouhani at an official ceremony before the documents were penned by cabinet ministers from the Republic of South Africa and the Islamic Republic of Iran. Some of these included a memorandum of understanding between the two sides on cooperation in the field of trade and industry, agriculture, water resources management, arts and culture, and exchange of information. The visit is aimed at boosting bilateral relations between the two countries, which Zuma says shares significant history and diplomatic ties.
It is in this regard that today we discussed various mechanisms that we can deploy to strengthen our political, trade, investment, and economic, as well as people-to-people relations between our two countries.
And here in Nigeria, data from the National Bureau of Statistics shows that the total number of GSM subscribers rose from 1.48 million at the end of the third quarter of 2015 to an industry high of 149.7 million in November, but dipped to 148.6 million in December 2015. Now, this drop was attributed to declines in MTN and Etisalat, while Glo and Airtel witnessed rise in their number of subscribers. On a year-on-year basis, however, numbers of GSM subscribers rose from 136.6 million in December 2014 to 148.6 million in December 2015. And the data shows MTN still dominated market shares by December 2015. Now, staple food prices in Nigeria are up again as inflation figures are expected to be released in mid-May. Now, to make sense out of the domestic food prices, I'm being joined by a research analyst with financial derivatives company, Adim Okwesa. Good afternoon, Adim. Thank you for joining us.
Thank you very much.
Now, what is driving staple food prices up again at this time?
Well, it can be attributed to several reasons. Number one being the lack of adequate rainfall, which is causing planting shortages, especially with perishable products. For some reason, the rainy season is unusually mild and the heat is very intense. Whereas usually around this time of the month, average temperatures are around 27, 28 degrees, but now the average temperatures range to 34 degrees, 35 degrees. So it is very hot. So all these seasonal factors are driving food prices higher, especially perishable goods like tomatoes, peppers, yam, and so on. But I think you can relate this heat to the El Nino weather phenomenon because other sub-Saharan African countries are also experiencing higher food prices because of weather-related issues. For example, South Africa. South Africa is usually a net exporter of wheat, but now this year they have to import wheat and maize because of intense heat and weather issues. If we bring it closer home, Ivory Coast, their major export is cocoa, but they have reported less amounts of cocoa and poor quality cocoa. So it's not unique to Nigeria. Other sub-Saharan African countries are also experiencing seasonal factors. And another reason for higher food prices is also the issue of forex scarcity. Some grocery stores and supermarkets are running low of inventory because of difficulty in accessing forex. So as long as this situation persists, food prices will remain higher. But on a positive note, with oil prices being above $40 for the past 3 to 4 weeks, we should expect higher exports proceeds, which should alleviate the issue of lack of forex. And
right,
also,
Adim.
And also, we all know the fuel scarcity, which has lasted longer than expected. So with that, transport costs are higher. So that is driving food prices higher.
All right, Adim, you've been doing a lot of research on this, looking at the prices of domestic commodities. I'm sure you must have talked to some of the consumers. What are their reactions to the current prices?
Consumers are groaning. No one likes this situation. Coupled with the harsh economic environment, it's not a pleasant time for Nigerians now. Money is slow to enter, so it's a very bad mixture, to be honest.
So how much impact does the commodity prices now have on profit margins of manufacturers, particularly the fast-moving consumer goods like Dangote Sugar and Guinness?
Well, with higher food prices would affect the cost of sales for these companies. And with sales revenues already under intense pressure from the tough economic environment, iterating disposable income, all these factors are going to affect the profit margin of these companies. Combination of higher sales, lower sales revenue. Ultimately, we should expect lower profit margins from these companies. Guinness just released its half-year results, financial results, and it reported an 18% decline in turnover, which affected its profit margin. So we should expect more of this, especially with FMCG companies.
All right, Adim, just before I let you go, April inflation figure will be released sometime in May. What are your expectations?
We at FDC project a flat or at worst, the marginal accretion. My reason being because the factors that drove prices high up in March, they still persist. And we know that inflation is compared year on year as April 2015. April 2015, that was the peak of fuel scarcity. So there were still significant cost push factors in this time last year. So I don't think we shouldn't expect inflation to rise significantly higher. It'll be either flat or a marginal accretion.
All right, thank you very much, Adim. Let's see how it goes. Thank you for your time, Adim. Adim Okwesa, research analyst with Financial Derivatives Company there.